Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within corporate filings. Today we're diving into FEMASYS Inc.'s latest report, and let's just say they've been busy making some significant moves behind the scenes, including some that might surprise even their own insiders. Alright, so FEMASYS Incorporated is letting us know about some pretty important deals they've been cooking up. Basically, they've entered into a big agreement to sell new securities, which is a fancy way of saying they're raising money by selling pieces of the company, like notes and warrants. This is a Form 8K filing, which is for very important current information that investors need to know right away. Think of it like a news alert from the company. The 3rd of November, 2025. So this is all about what happened on that day and what is planned to happen shortly after. So what exactly happened on the 3rd of November? FEMASYS Inc. signed a securities purchase agreement. This is a contract where they agreed to sell certain financial instruments to investors. These aren't just any old shares, they're selling senior secured convertible notes. Now, what does that mean? Senior secured means these notes are a top priority if the company ever runs into trouble and they're backed by the company's assets. Convertible means the people who buy these notes can later turn them into shares of FEMASYS' common stock. They're also selling warrants. Think of warrants like options. They give the holder the right, but not the obligation to buy FEMASYS stock at a set price in the future. They're selling three types: Series A-1, Series B-1, and Series C-1 warrants, each with a different price. This whole deal is called a private placement, meaning they're selling these directly to a select group of investors, not to the general public on a stock exchange right now. This private placement is happening in two stages, or closings as they call it. The first one is on the 7th of November, 2025, and the second is on the 26th of November, 2025. On that first closing date, they're issuing notes worth over $8 million. These can be converted into nearly 11 million shares of common stock. They're also issuing a whole bunch of warrants alongside these notes. Then, on the second closing date, they're adding almost $4 million more in notes and an equal dollop of warrants. All in all, FEMASYS is expecting to bring in about $12 million from this entire private placement. That is a pretty significant chunk of change. So what are they going to do with all this money? A big part of it is to pay off some older debt, specifically senior convertible notes they issued back in 2023. They also plan to use the rest for working capital and general corporate stuff, which basically means keeping the lights on and funding day-to-day operations. Here is a juicy detail. Some of the company's top brass, including the Chief Executive Officer, Chief Financial Officer, and a board member, also put their own money into this private placement. They bought notes and warrants for about $100,000. And importantly for fairness, they did it on the exact same terms as all the other investors. Now, one of the major investors, a group called Pointillist Global Macro Series, is getting some special privileges. They're being called the lead lender here. Because they're putting in a significant amount of money, they get to nominate one person to be on FEMASYS' board of directors. This right lasts until certain conditions are met, like if their ownership stake drops below a certain percentage, or if the notes are fully paid off. On top of that, the lead lender has agreed to a standstill agreement. This means for about 5 years, they won't go around buying up a whole lot more FEMASYS stock beyond what they're already buying in this deal. That would push their ownership above 30% without a really good reason or process. It is a way to keep things stable. Let's talk a bit more about these notes. They come with an 8.50% annual interest rate, pretty standard for this kind of deal. The interest is paid in kind, which means instead of getting cash payments, the principal amount you loaned goes up each year, so your investment grows over time. These notes can be converted into FEMASYS common stock at a price of $0.73 per S-share. This conversion price was about 15% higher than the stock price right before the deal was announced, which is pretty typical. Remember, I said they were senior secured. This means FEMASYS has pledged basically all of its assets, including ownership in its subsidiaries, as collateral to back these notes by signing various security and pledge agreements. This gives the note holders a strong claim on the company's property if things go south. There is also a clause that allows FEMASYS to force the note holders to convert their notes into shares under specific conditions. This usually happens when the company's stock price has gone up significantly and they want to reduce their debt by converting it into equity. The notes also lay out what counts as an event of default. This includes things like not filing proper paperwork with the CC to allow the shares to be traded or failing to pay back the debt. If an event of default happens, the note holders have the right to demand their money back in cash. Now about those warrants, the Series A-1 warrants can be exercised immediately at $0.81 a share and last for 10 years. The Series B-1 warrants are similar, exercisable immediately at $0.92 a share. But they have an earlier expiration date tied to when FEMASYS announces it has 2 consecutive quarters of at least $3.25 million in sales. If that sales milestone is hit, the warrants expire 45 days later. So these are a bit more conditional. The Series C -1 warrants also have an early expiration. They can be exercised immediately at $1.1 a share, but they expire 45 days after FEMASYS publicly announces it has received FDA approval for something called FemBlock permanent birth control. This is a big one if that product gets approved. These warrants will have a shorter lifespan. A crucial point for all current shareholders, there is a limit on how many new shares can be issued through converting these notes and exercising these warrants. It is set at 19.99% of the company's stock outstanding at the time of the agreement. If they want to issue more, they'll need approval from their existing shareholders. FEMASYS plans to ask for this approval at their next shareholder meeting because these securities weren't registered with the CC when they were sold. FEMASYS has to file a registration statement to allow these shares to be resold on the public market. They have agreements in place called registration rights agreements to make sure this happens. They need to file and have this registration statement declared effective by regulators within 6 months of the first closing date. This section is all about the fact that these securities were sold without being publicly registered, which is allowed under certain exemptions like Section 4, 2 of the Securities Act. This means the investors are considered accredited investors, meaning they're sophisticated and wealthy enough to understand and handle the risks. They've also assured FEMASYS they're buying for investment purposes, not to flip them for a quick profit right away. So, wrapping this up, FEMASYS Inc. has secured a significant funding round of $12 million through convertible notes and warrants. This money is earmarked for debt repayment and general operations, which is a good sign that they're trying to strengthen their financial footing. A notable aspect is the participation of company insiders, which often signals confidence but also needs to be watched for any potential conflicts of interest, though they claim these purchases were on equal footing. The lead lender's ability to nominate a board member and the standstill agreements suggest a significant influence and a desire for some level of control or stability. The terms of the notes and warrants themselves, including interest rates, conversion prices, and exercise prices, are detailed. But the key takeaway is the potential for a substantial number of new shares to enter the market if the stock performs well, and shareholder approval is granted. Risks to watch include the company's ability to secure shareholder approval for the increased share issuance, which is crucial for managing dilution. Also, the company's performance will dictate whether the Series B-1 and C-1 warrants meet their expiration triggers related to sales milestones and FDA approvals. Overall, FEMASYS is making a strategic move to raise capital and manage its debt. The success of this private placement will hinge on its ability to leverage these funds effectively, grow its business, and navigate the upcoming shareholder vote. It's a balancing act between securing necessary capital and managing potential shareholder dilution. Alright, that is our deep dive into FEMASYS Inc.'s latest filing. What do you think about this deal and its potential impact on the company? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community. The link is in the description for even more discussions. Thanks for watching.